So students, once you have understood the need of government budget, now we need to know the components of government budget. Broadly, there are two components of government budget: budget receipts and budget expenditure. Now let us begin with budget receipts. What are budget receipts? It records the transactions related to all the sources of receipts, that is, inflows of the government during a year, which is further categorized as revenue receipts and capital receipts. Now here you need to know the difference between revenue and capital. So any receipt which is going to affect the assets or liabilities of the government will come under capital head. And if it doesn't affect the asset or liability of the government, it will come under revenue head. So since it is a receipt, it should either or nor or neither increase liabilities or reduce assets. Like revenue receipts. It includes all those receipts which neither increases the liabilities of the government or nor reduces the assets of the government. Whereas capital receipts includes all those receipts which either increases the liabilities of the government or reduces its assets. Whereas budget expenditure records all the spendings of the government during a year, which are again further categorized as revenue expenditure or capital expenditure. So if any expenditure is affecting assets or liabilities of the government will fall under capital expenditure, but if it is not affecting assets or liabilities of the government, it will fall under revenue expenditure. So any expenditure which neither reduces the liabilities nor increases the assets of the government will be called as revenue expenditure. But if any expenditure either reduces the liabilities or increases the assets of the government will fall under capital expenditure. Now, which all items fall under budget receipts? We need to know all the items that can be included in both revenue and capital receipts. Okay, so let us begin with revenue receipts. As you know, all those receipts which neither increases liabilities nor reduces assets of the government will be included in revenue receipts. Now, revenue receipts are further categorized into two, that is tax revenue or non-tax revenue receipts. So any revenue of the government which is from any kind of tax will fall under tax revenue, whereas any receipt or revenue which is coming from a non-tax source will fall under non-tax revenue. Now I can give you some examples. Tax revenue includes both direct as well as indirect taxes. The difference between the two we will do later also, but here I am giving you some examples. Direct tax means, for example, income tax, wealth tax. All right. Indirect tax, the main example is GST. Now, non-tax revenue receipts includes interest receipts of the government from sources of profits and dividends, any kind of fees or etc. There are many more examples in non-tax revenue receipts which you can see from your book. Next is capital receipts. You know that any receipt of the government which either increases its liability or reduces its asset fall under capital receipts. For example, borrowings. So any kind of government's borrowings either from public or foreign will fall under capital receipts. Recovery of loans or disinvestment. You all know the meaning of disinvestment. So these are all the components of budget receipts, which is a part of component of government budget.